Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're doing a deep dive into Apple, ticker AAPL. We're using our research captured just this morning, September 3rd, 2025. And the big question really is this: can Apple's brand, that legendary shield, keep the competition away? Especially with all this talk, these whispers about an AI talent exodus.
That's exactly it. And for you listening, we're going to peel back the layers on Apple. Not just one angle, but, all sides. We'll look at the big economic picture, Apple's internal story, what the market sentiment is saying, and of course, what the charts are actually suggesting underneath it all.
Okay, let's start there then. The macro environment. It's kind of surprising, right? Seeing this pre-market optimism, especially in tech, feels like the market is just itching for a rally, really wants to push higher.
It is, yeah. It's an interesting contrast because despite that energy, there looks like a storm brewing. You've got economists from Barclays, from Moody's, flagging maybe a 50% chance of recession. That's significant.
Yeah.
And it's not just forecasts. Manufacturing, it's been contracting for 6 months straight. Plus, today we've got key data dropping job openings. The Fed's beige book, it makes the market feel like, well, a bit of a minefield, honestly.
A minefield. Okay. Yeah, that fits. And speaking of potential blowups, let's look at Apple's fundamental story. That headline about the AI talent exodus feels like, I don't know, a real gut punch. Maybe a 5-alarm fire for future innovation. Hearing about key researchers leaving Apple for like Meta, OpenAI, that's got to be a worry.
Yeah. It really does. And, it's not the only issue. There are those nagging regulatory things in Europe, and even the German court banning their carbon neutral claims. It chips away bit by bit. But then you look at Wall Street. Still huge faith, right? Over 62% buy or strong buy ratings. They love the ecosystem. So here's the conflict for you. The street loves it, but our valuation models, they're suggesting something different. Maybe $185 based on free cash flow. Or even $161 based on earnings. That's way below the current trading price, new $230. So can that reputation justify the premium, especially if they're struggling with AI talent? That's the core question.
Wow, yeah, that's a huge gap. So how is the crowd reacting? I mean, to this AI news specifically, are they spooked?
You'd think so, maybe, but not really, not yet. The options data, it shows a pretty bullish put-to-call ratio, just 0.63. So that means more traders are betting on a rise than a fall, quite significantly more. They seem to see $235 as a key ceiling for calls, a barrier. And maybe $225 as a floor for puts, a support level. And get this, short interest is tiny, only 0.86%. So no, the crowd isn't really betting against Apple right now, despite the headlines.
Okay, interesting. So the sentiment is still positive despite the AI worries. Let's turn to the technicals then. What are the charts showing us? Without the heavy jargon, what can you see?
Right, let's break down the trend. Well, short term, it looks okay, positive even, but there's this long-term bearish crossover looming. That's a pretty strong headwind. Think of it like the underlying current pulling against the surface waves.
Okay, headwind. Got it.
Then volume. This is tricky, kind of conflicting signals. Some money seems to be flowing in, sure, but other indicators hint at quiet selling. Like maybe big players are selling into this rally, using the buying interest to get out.
Sneaky. What about momentum?
Momentum is clearer, it's fading, definitely declining power, bearish crossovers showing up. The stock just looks like it's getting tired, losing steam.
Right.
And finally, volatility. It's shrinking, contracting, which usually means the stock is consolidating, kind of coiling up like a spring before it makes a bigger move, up or down.
Okay, coiling spring. So putting all that together, the macro warnings, the AI drain, the mixed sentiment, the fading technicals, what's the playbook for today?
Well, for you, our verdict leans bearish. The logic is, those macro warnings are severe. That AI brain drain feels like a really potent negative catalyst for the future. And the technical momentum just isn't there. It seems to outweigh the current bullish options sentiment.
Okay, bearish outlook. So what's the game plan?
Watch the pre-market price. It's around $236. And keep a close eye on that $235 strike price. That's key. If sellers manage to push it firmly below $235, that would really validate the bearish view. And it could open the door down to that $225 support level we talked about.
So it really feels like Apple might need more than just like a software update to fix this AI issue. The brand is powerful, yes. The ecosystem is sticky. But looking at the data today, it does suggest the core code might be looking a bit vulnerable. Makes you wonder if even Apple's magic can last if the innovation engine starts to sputter, right? That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.